The US dollar's role in global markets is a fascinating topic, and today we're diving into its unique behavior and the insights it provides. The dollar smile, a concept developed by Morgan Stanley's FX strategists, reveals a fascinating pattern. Imagine a smile-shaped curve. On the left, the dollar rises when global growth is weak, attracting nervous investors seeking a safe haven. On the right, it strengthens when US growth outperforms the rest of the world, drawing capital flows. In the middle, when global growth is robust and synchronized, the dollar weakens as investors seek riskier assets. But here's where it gets controversial. Some investors argue that this dollar smile might be breaking. They believe that in times of extreme global growth concerns, the dollar no longer rises. Why? They point to factors like political uncertainty, trade wars, rising US interest rates, and changing global asset structures. However, Morgan Stanley disagrees. To test this theory, they've analyzed economic surprise indices, which compare actual economic data to forecasts. Their findings? Over the past 20 years, the dollar has indeed risen by an average of 0.8% per month during periods of surprisingly weak global growth. And when US growth outperforms expectations while global growth lags, the dollar's rise is even more pronounced, averaging 1.1% per month. And this is the part most people miss. Even when the US is the source of global concerns, the dollar has proven its safe haven status. Take, for instance, the geopolitical tensions between Israel and Iran in June 2025, which led to a surge in the dollar as investors sought safety. Despite a brief dip in April 2025 after tariff announcements, the dollar's overall performance in recent years supports the dollar smile theory. Even with changing global asset ownership patterns and rising US interest rates, the dollar has maintained its resilience. However, it's important to note that the US dollar has experienced a significant decline against other currencies in the first half of this year, ending a 15-year bull cycle. The Fed's interest rate cuts and ongoing policy uncertainty are expected to further weaken the dollar through 2026. So while the dollar's journey might be a bit bumpy, Morgan Stanley's framework suggests that it will continue to smile through market volatility. What are your thoughts on the US dollar's role in global markets? Do you agree with Morgan Stanley's assessment? Or do you think the dollar smile is a thing of the past? We'd love to hear your insights in the comments below.